Well, it's the volatility of crude oil that goes up one day and down the next, but with a downward trend in sight. China's currency devaluation or the global sell-off in shares 2016 providing and proving to be the year of the drag. So it's up to central banks from the US, Japan and also South Africa to try and find some solutions. This is the Moneymakers. I'm Bruce Whitfield. Tonight I'm joined by Brigid Taylor, Chief Executive of Kaon Capital, to discuss the war that is being waged to try and ravage currencies, save others and also rescue bleeding markets everywhere. What a fun start to the year you have had, Ms. Taylor.
It's been shock horror. I think the market is extremely confused, Bruce. I mean, if you look at the global markets, we started with obviously Nenegate in December, did not help the rand. But coming back from that, we've got a global meltdown of where do we put our cash. If you look at what's happening on equity markets across the globe, slowing down, selling off because they're overvalued. You've got slower growth. It doesn't matter where you look. We were all hoping that China would come online, and that unfortunately is a demising economy. And then you've got the US, who also hasn't managed to come online to the levels that we were hoping for. So, geez, I mean, we saw an interest rate hike out of the Fed in December, but it doesn't look like we're going to see one again this week.
At the risk of sounding like Barry Rue, I put it to you that we are far too obsessed with data. We're far too obsessed with data points, and we need to take a big step back away from the noise and apply some old-fashioned logic.
I completely agree with you, and I think if
nobody else is listening, everyone else is responding to markets.
You know what the problem is that you're stuck in a conundrum where, so if you're an investor and you've got cash and you were long equities, the market was rallying and it was rallying hard. So why would you not want to be long that, right? Interest rates were going down globally, so you didn't really want to be long of your bond type market or your cash type market. However, the fluctuation's really been expressed because the most liquid market is the foreign exchange markets. So you're seeing those fluctuations happen. However, there isn't a point of entry where it really looks good. Where's a great investment? Maybe the UK. The US looked like a great investment, but now investors are selling their assets in the US. Why? Because they're looking at other ways of making money. So we've become a little bit more confused, but in that, getting rid of the noise, as you were saying, is saying, where do I just get short-term returns right now? Because I don't know what tomorrow, next month, and the next year are going to look like. If we look at the last 3 years, we've had unbelievable volatility in these markets, and people have been switching out of various asset classes, hoping to make a return. Global growth hasn't come online, and inflation hasn't come online.
Now, how much of it is due to currencies? How much is it due to economies? Because one of the big debates in Davos was, are the ructions we're seeing in January and probably into February and March as a result of macroeconomic issues with broken economies that are now heavily indebted post-2008? Or is it simply just a little market washout?
No, I think it's as a result of macroeconomics. So if you look at South Africa, for example, we have been warned by ratings agencies ad nauseum for the past few years about certain imbalances in our economy. We're looking at severe unemployment. We're looking at slower growth. We're looking at manufacturing that's struggling. We've got a lot of things that need to be sorted out from a fiscal perspective. Monetary policy can do so much. And, you know, your monetary policy committees are stepping in and trying their best. They're hiking interest rates if there's that sign of inflation. They're looking to protect currencies by looking at the interest rate disparities, etc. But the big concern is fiscal policy isn't adequate at this moment. And if you even look in terms of the South African economy, if we want to get manufacturing or production online, now we have to start spending in dollars. That's costing us almost 18 Rand a dollar, where a year or two ago it was 11 and even 6 Rand a dollar. So it becomes so much more expensive. How do we get that growth engine up and running? And how do we create that solution between government and business to create a solution in a sustainable economy?
Few people understand. If you listen to the Reserve Bank governor earlier today, fewer people understand the real pressures in the South African economy better than the Reserve Bank governor. But he has got his hands tied. The guy is in a really, really tough space.
He is. I mean, he doesn't manage the budget, Bruce.
No.
I mean, if you think about it, he doesn't have the purse strings. He's trying to keep the balance and he's trying to keep everybody happy. So there's that pressure about growth. Can monetary policy determine the growth trajectory? Absolutely not. If you don't put the right infrastructure in space and spend money in the right areas where we see money being spent, but we're seeing that outcome. So we talk about skills, we talk about upskilling people, we talk about education, we talk about business being incentivized to build the economy. Those things monetary policy cannot control.
No, it certainly can't. Here we sit, though, with the rand close to 18 to the dollar. We look at it at 23, 24 to the pound. If you go to your Forex bureau, they're going to charge you nearly $19 for a euro. A lot of people are telling me that this is as far as it's going to go. We've blown out very dramatically. It can't go any lower. Now, the last time anybody said that to me, it went lower. But it just seems so counterintuitive to have the currency as vulnerable as it is.
You know, it's a sad position because we're in a bit of a perfect storm. So we've got the US is coming online. Fortunately for us right now, they are unlikely to hike in the foreseeable future because their inflation hasn't progressed at the limits that they wanted to.
I mean, so they pulled the trigger possibly too early on interest rates. Huge pressure on the central bank to try and normalize, so-called normalize interest rates.
Yeah.
And that growth, that inflation isn't coming through. So suddenly Janet Yellen is looking a little bit jittery.
Well, they are a bit jittery, and I mean, and rightly so. They've got to be cautious about how quickly they start stepping up the plate because they want to protect their economy internally. They've been really great about creating internal mechanisms. So a weaker dollar suits them to a certain degree, especially if you look at the fact that oil prices and other commodity prices have dropped so much. So those import costs are negated. Their big interest, though, is their export market. So having a weaker dollar maybe benefits them in the short term. The other big issue is if you look at the South African economy, unfortunately for us, we've got ratings agencies which are starting to press real problems.
They are breathing down the backs of our necks.
And we're not listening, Bruce. We haven't been listening for a while. And if we don't, and
we
they
are listening.
pull it...
We are listening.
We're listening, but is government listening?
I'm going to calm your nerves on that particular front. And that's why I cannot wait for Budget 2016. I think if there is a magician who has got a very deep big black hat and a wand, and there's a rabbit hiding in there somewhere, Pravin Gordhan's going to find it.
Oh, I hope so, from your lips to God's ears, because we desperately need it. You know, what we need to know is that there is going to be some form of sustainability, and I think that's where the ratings agencies are concerned. How are we going to contain this deficit? How are we going to create sustainability and some form of growth projection, even if we know that growth is only going to be 1% or sub 1% this year, as long as the projection starts to show some elevation of that, so that there is a light at the end of the tunnel.
No, South Africa feels right now, I don't know if you've been reading the reports of those poor people who were on the FlySAF Air flight that went from 30,000 feet down to 10,000 feet when the pressure in the cabin dropped. The cabin pressure of the South African economy has dropped. We're plummeting from 30,000 feet. We're headed towards the ground, and we need the pilot
to pull it up,
to take us out of the deep dive, because we headed towards a deep dive, an inevitable deep dive into recession and into ratings downgrade. But Pravin Gordhan isn't a guy who gets scared easily, and he's the pilot.
Well, he's been, I mean, we've seen him in the past, so we know what our pilot can do. I think that the concern...
Well, what the pilot can do, we just want the co-pilot to take over.
Well, we know what he can do, and at least there's some form of, you know, that trust behind that. So that helps us in the short term. The big issue now is to say, how do we stop this deep dive? We don't want to go into crash mode. We have to stop it. So that's the point, is are they going to stop it? Is budget going to be enough? Because going back to this rating agencies thing, if what we got to realize is that we got issued into the WGBI, which from a global... which is the World Global Bond Index. Now, what that means is that anybody who's a global fund can only invest in entities that are listed on certain indexes, and one of them happens to be the World Global Bond Index. If you want to invest in people's sovereign bonds, which is South African bonds, they have to go through an index, which in that regard would be the WGBI. If you're not on the WGBI, you have to sell your assets. So if
you will automatically be excluded from the WGBI if you're downgraded to junk
status. If two of the agencies downgrade us to junk status, at the moment 40% of the foreigners own our bonds. Can you imagine the sell-off? They have to, even whether they want to or not, it's part of their mandate.
What is the consequence in the real world of that?
That is a rand that goes to 25.30. And that's your concern. So that's the conundrum. Listen to the ratings agencies, because it does matter about our rating. It doesn't matter for the guy that's buying a loaf of bread. It matters to him because he's going to have...
eventually.
It will matter to him later when the rand comes off and when he has to pay more for his loaf of bread. But in the short term, if we're not attracting that foreign investment, we can't pay for our debt, and we're going to battle to get back into that realm of investment grade, which is why rand was trading at R6.50 a few years ago. We need to get that flight back up to 33,000 feet.
Well, I mean, maybe not up to 33,000, maybe to 25,000 feet, which is what, about 10 to the dollar?
That's fine.
We can live with 10 to the dollar, but we also want that predictability and consistency, and that's
Frogs in boiling water, though, Bruce. That's what it always reminds me of. We're paying threshold. You know, we talk about 10 as though it's no big deal, but we were scared when we were trading 9.50 that we would trade 10. Now we're trading 16.50, looking at 18, looking at 25, and we're saying, oh, well, you know, we'll deal with it. We've got to stop it.
You do have to be mad to be an optimistic South African. I'm absolutely convinced of that.
Look, we are, because we live here. So we have to remain optimistic about the fact that we believe in our country. We want to see the best. We want to see the best for everyone. We want to see business. We want to see employment, etc. But everybody has to do this together. We have to make good, clear decisions. It's like running a company. The CEO needs to make tough calls and make tough decisions and make the company work, because otherwise it will become insolvent. And that's the conundrum that we sit in at the moment.
But in this environment where the Chinese are almost invariably going to be revaluing their currency downwards as this year progresses, and they're going to do it more than once this year probably, where we've got the Americans who are also a little bit tired of their dollar, which is a bit too strong and makes them anti-competitive. There is no certainty. I mean, there's never certainty in currency markets. That's why what keeps you employed, I suppose, is the uncertainty. But it feels like a lot less certainty than certainly in the last 15 years since I've been looking at this.
Well, this is the thing. It's exactly as you say. I mean, we've almost got to be careful we don't throw the baby out with the bathwater. But the reality is that data means so much. At the end of the day, the global growth picture is really benign. So it's about choosing the right stock to invest in, the right country to invest in, the right emerging market. What is risk? What is not risk? If we look back at the financial crisis, a lot of the big banks that were rated AAA at the time actually were those that went insolvent. Unfortunately for us, a lot of investors find themselves in that same position with sovereign investment. So they're starting to say, is an emerging market as risky or more risky or less risky than what we deemed prior to that to be a non-risk asset, being the likes of the US? If you look in Europe, you're getting negative interest rates. Why would you invest in an entity that's got 17 different sovereigns that effectively is, a lot of which are actually bankrupt, and you wouldn't invest in an African market? It's a lack of liquidity. How do you weigh that up? So it's weighing up those risk parameters, and you really have to do it on an individual basis, because unfortunately there's no real line in the sand, Bruce. It's been this turmoil of markets looking for money to go into a home, and certain things worked, but then it doesn't work anymore. Commodity price crash hugely caught the market off guard, and that's impacted equity prices. It's impacted everyone.
You've told me the problem. In 45 seconds, what is the solution?
I think the real solution is for people just to stop the noise, look at where they're at currently and brace themselves. So face the risks. As we mentioned earlier, there are a couple of risks in the system. So what are they? It's almost looking at your finances and saying, right, I need to pay off this credit card because it's costing me too much. How do I do that effectively? I look at the risks. I say, right, there's a risk that South Africa may be downgraded, but right now it's not. We have a risk that the rand may weaken more. How does that impact my business? How do I afford to grow my business if I have to import at those costs? How do I create export potential so that I can continuously benefit from the weakness in the rand? Those kinds of questions. Block out all the noise and see how you can make a difference in this economy so that we can take this thing to the next level. Because everyone has the same problems. It doesn't matter whether you talk to a German, you can talk to a British guy, you can talk to someone in the US. We all have similar issues, unfortunately.
We do have similar issues. Ours are just bigger and more difficult because we live here. Brigid Taylor, Chief Executive of Kaon, thank you very much for coming in. Nice to see you. Fascinating views, as always, into the state of the economy following today's rates decision. Thank you for watching. There'll be more well-waged soon, no doubt. Currency wars and others from us here at the MoneyMakers. Have a very good evening. Bye-bye.